quick concept check for us on the importance of position sizing to the stop loss. Now, I am looking at a chart of Disney off of our recent stock report. I'm looking at this week's stock report by Coach Tim. It's awesome. And a handful of really great candidates in there. And one that catches my eye with some potential here. And again, the outcome is unknown as I'm making these, just so you know. I think there's a good breakout setup here on Disney. So we've got Disney that's been in a nice, powerful pop. You know, they announced their streaming service. Market's been pretty bullish. We got a cup and handle type pattern here, or forming, or an ascending triangle, and a good potential breakout. And so we might have to wait for a day or two before this thing pops enough to get filled. And we've got our price criteria up here where you can look at Disney. You can see, okay, we're looking to enter above 143.10. Exits down at least below 138.50, and we can target 150, 160. So there's some good potential in there. And if I'm a swing trader, maybe I'm thinking about buying the breakout and using a trail stop, based off of the ATR, or maybe below this current green candle, assuming that the price continues to rise and break out and run up like we're expecting. But if I'm a position trader, I probably want to use the same, buy entry technique. But I might want to move that stop back off of here and put it down below a pivot point, a big support resistance zone that's a little bit more established to give me a higher probability of staying in the trade longer term. So I'm going to go grab this little long tool that we've been using to help us talk about position sizing. And let's assume this time that as I set this up here, I'm going to click on this little cogwheel up here. Let's assume we have a $50,000 trading account. So let's imagine we got a $50,000 trading account. And we still want to use that same 1% risk tolerance, okay? So we go ahead and click on OK, and I've got the entry up here. We're going to grab this and slide this around until we get the entry up above 143.10. I like that 143.26 zone. That's a good entry for me. Stop loss, if I use the candle low down here, we could get that stop down around 139.078 or so. And then for the target, I believe we can get this out here. We could say high-end target out at 160. We think it can get that high. Near-term swing trader's probably only going for like 150. So the swing trader's going for 150. They got a 1.65 to 1 reward to risk ratio. And based off of a $50,000 account, they can buy 143 shares. That says quantity 143. Okay. Well, if I'm a swing trader, no, that's a good, reasonable scenario. Let me pull that target back down a little bit, get it down towards the 150 target we were talking about. And we need at least that 1.5 to 1 reward to risk ratio. So we might have to adapt the stop loss a little bit if we target that 150 zone. Still gives about 1.65 to 1. If I pull back here and move the stop down as a position trader, and I extend the target up to 160, and again, we use that same 50,000 shares, 1%, the position size, you'll notice, drops to 87 shares because we're doing a different stop loss technique, and as a position trader you would trade fewer shares. So that's what we mean by position sizing the stop loss, is whether you're long or short or trading stock or options, and I'll do a separate video for options, we want a position size to the stop loss. So the market doesn't care how much you can afford to lose. You need to set your stops below technical levels like candle lows and pivot lows, and then position size according to the risk based off of the sound technical techniques, and not just based off of what your gut can handle as far as your pain threshold or tolerance goes. Reduce the position sizes when you're using looser stop losses, and you can leg into positions, slowly and surely, and build into bigger positions if needed. But start out small, and again, use appropriate position sizing for your stop loss.